Saurabh, technology, what's your stance here now? They've had a very volatile period the last 6 months at least. The valuations are a lot more reasonable than what they were, but enticing enough?
So a year ago, around November, December last year, I started sort of shouting from the rooftop that IT stocks were a raging buy. I still think there's value in the sector. So as we're seeing in the Q2 results, these guys are short-staffed in America. But my reading is they will fix their staffing problems, and my reading is the rupee will continue to be weak over the next 3-4 quarters. So IT in our country, whether we like it or not, and actually pharma in a similar way, is dependent on the currency to give them a competitive advantage. For a good 4 years, that competitive advantage disappeared. 3 quarters ago, their problems started getting alleviated with the rupee sinking. I think the rupee has further weakness to go, and I think the IT companies have 3 or 4 wonderful quarters ahead of them in terms of results and in terms of volume growth. So I would still be a fan of Indian IT. I would buy at least one large cap and one mid cap IT stock in my portfolio.
Actually, that's the question, right? Mid cap IT, sort of, the valuations are nowhere cheap. They would be at the upper end of valuation parameters. The last 4-5 years, at least, if not more. Would you be comfortable paying about 18-20 times?
So the way to think about it is, if you have a decent IT company which can show around like for like, constant currency growth in the top line of around 9-10%, and with some efficiency gains, show 15-16% EPS growth. Given that this is an immensely cash generative sector, high teens PE multiples is not so demanding for a mid-cap IT firm. The challenge for mid-cap IT firms in our country tends to be that they're very vulnerable to economic downturns in the client geography. Now, if the US economy were to sink into a recession, or if US economic growth were to sink over the next a couple of years, yes, mid-cap IT firms would have a problem. For now, the US economy is red hot, the Indian currency is weak, and say a well-run mid-cap IT firm such as L&T Infotech, I wouldn't have too much trouble considering buying it. So yes, there are macro variables. One is our own currency, the second is the US economy. Both of those variables seem to be pointing in the right direction, and a well-run mid-cap IT firm such as L&T Infotech, I wouldn't have too much trouble with the valuations.
I'm going to shift focus to real estate, since we mentioned it when we were talking about NBFCs. And numbers for a few of them have not been bad, the likes of an Oberoi Realty for one. This space, is it still untouchable for you? And the likes of an Indiabulls Housing Real Estate and the others in the same?
So look, I think it's reasonably clear that a combination of GST, RERA, the whole attack on black money will lead to a consolidation of Indian real estate. If you look at GDP data, this is a massive sector. This is almost 10% of the Indian economy. But it's a fragmented sector, and as the sector consolidates, I think we'll end up with around 5 to 10 mega real estate developers across the country, right? So it does make sense to say early on, let's look at the sector, let's look for well-run, well-managed real estate developers with strong balance sheets, the ability to raise money from the capital markets, and if we can find them, let's get in at sensible valuations. So I think there is a argument for buying top-notch real estate developers, and there are top-notch real estate developers out there. The reason I would hold off for a bit is the sector has been shored up by funding from the NBFCs and HFCs. Real estate developers specifically have been shored up by funding from HFCs and NBFCs. I think that funding pipeline is beginning to dry up, and hence I would give it 3-6 months of the credit crunch. I would wait for the consolidation in the real estate sector to begin before I get a couple of good developers in my portfolio. So strong arguments in the long run to buy a couple of top-class developers in a sector which is big, will consolidate, but I would wait before I buy. Wait for the cost of funding to rise further. Wait for consolidation to kick in the real estate developer sector.
Sure, but isn't it like a cycle? Obviously, one of the funding needs to feed construction activities for most of these developers, but probably focusing on developers right now who are sitting on already built inventory, which can be cleared.
Right. So remember, whatever inventory you have, the price variable is beyond your control. And I think the price variable, residential real estate, the price variable is going to go south in the next 6 months. As cost of funding rises, say the typical home loan a year ago would have been, say, 8%. we're probably pushing north of 9% of the typical home loan, and my reckoning is we'll probably push towards 10% on the typical home loan a year hence. So as cost of funding for home loans itself rises, I think there'll be further pressure on residential real estate prices. So whatever your inventory is, your ability to offload that at good prices will be in check over the next 12 months.
Oh, that's interesting. They sound kind of similar right now, what's happening to real estate and maybe NBFCs, in that the sector has a lot of headwinds. There might be a few companies that will emerge well, and what to do with those. But interesting thoughts out there. The other pocket, Saurabh, and that's not just necessarily from the near term, but from the medium term, is all marketing companies. Now, beaten down, the numbers may vary depending on crude prices, but is that 1 rupee penalty of sorts that was levied kill the sector in the near term?
So I think where the government deserves credit is that they let the price of oil float for such an extended period of time. I thought it was just remarkable show of political guts to let the price of oil float to the point where I think I was paying around 4,000 rupees for a full tank of petrol on my car. Yes. Every time I used to pay, I think, my God, what is happening? This is just unprecedented in our country. That being said, the last month of events around the OMCs has suggested that if this government is human, and with assembly elections this month and then the general elections around the corner, they will have to focus on the politics rather than the share prices of the OMCs. So if you buy OMCs today, you're implicitly making a call on who will win the election. And I don't yet have that visibility to make that call. But if this government comes back, if this government wins the election and comes back, then OMCs, to my mind, are a big buy, because the courage, the political courage that the government showed in letting the price of oil float, the petrol pump price of oil float till 3 months ago was enormous. And my reckoning is if this government comes back, OMCs become a big buy. But I don't have that visibility on the election result just yet. Hence, I would hold back on buying OMCs at the current juncture.
I just want to comment, since you're on the topic of elections, how closely are you watching the US midterms? Because, the last 2 times in the Obama administration, post-midterm elections, you actually saw a significant up move. But the expectation this time is focus is going to be on government spending and growth of economy, which may not tilt too well for stock markets, and it actually may not lead to a significant upside to the stock markets. Could that have a negative impact for us?
I think the main reason the US midterms are of interest is it'll give us a sense as to whether Trump comes back in another 3 years' time. Because he clearly is changing the economic paradigm in which all of us function. We've seen the effect on the Indian IT sector. The trade war is playing out basically through Trump's whims and fancies. So as a leading indicator of Trump's political future, these elections are of interest. Beyond that, I'm not so sure. I'm not so sure there's that much of an impact on the Indian stock market. I think US earnings growth, which seems to be under pressure.
No, just that the US stock market itself may start to...
My reckoning is the US stock market will tilt with their own earnings trajectory, given how, it's almost like a 10-year bull market, right? 9.5-year bull market in the S&P 500. I think that market, like ours, is now dependent on earnings growth to fire through. Clearly, there have been some wobbles on the big tech stocks earnings growth in this quarter. So I'm not so sure it's the stock market per se, the US stock market that I'm obsessed about. It's Trump's own political future. And if he has a rousing sort of midterm elections, it would suggest that his brand of politics is here to stay, and all of us then have to adjust our expectations accordingly.
Okay, just one final question from mine, and again, elections related, and which is purely a market call, Saurabh. I'm not asking you to take a call on what the political mandate would be, but if the BJP were to lose 2 out of the 3 main state elections, do you think the markets would view that negatively in the near term? Just a market reaction. I'm not saying whether it is positive or negative for the markets or the economy, but how do you think the markets will view that?
Yeah. So clearly, as is well understood certainly in Mumbai and in the institutional investor community, there is a degree of investor belief in the current dispensation. And if the current dispensation's political future were to look wobbly, there would be downside in the market. That being said, if you ask me from a personal perspective, from a fundamental perspective, I'm not so sure there is that much of a dependence between who's in charge in Delhi, what our economic growth is, what our stock market earnings are. So if the Nifty approaches 9,500 on, say, whether it's on the back of economic catalysts, the NBFC challenges, or the political scenario, if the Nifty approaches 9,500, I've got clear plans set aside for buying pretty aggressively. Already some of the small cap stocks were looking very tasty. A couple of weeks ago, I bought a bit when the market had conked off. I've restrained myself again because people are getting a little excited again. But if Nifty hits 9,500, I think it'll start looking very interesting. At that juncture, you really don't worry too much about the politics of the oil price and so on. Yes, there is stock market dependence on the elections, but one needs to look through that and think fundamentally.
Okay, so buy when others are
so buy when buy when the Nifty hits 9,500. I know we are at 10,500 odd today, but if for whatever reason we punch through 9,500, I think one should start thinking of loading up on Indian stocks.
Just to follow up on that, you said you'll be looking at a level of 9,500 on the Nifty to start loading up on stocks. When we had gone towards levels of 10,200, 10,300, at that time, because of the stocks and the number of stocks on the Nifty index itself, it was amongst the first 5 or 6 stocks that saw that big correction coming in because of the Yes Bank and Indiabulls Housing Finance, all these names which triggered the sell-off, and the true value of the Nifty was considered 9,800 at that time, even though it was trading at 10,200 because of these stocks heavily being cut. So in light of that, do you wait for the overall broader market correction also? Because that's something...
So I see what you're getting at. So the way I do it is I identify, say, between 15 to 20 really high-class companies, super fundamentals, well-run companies. Then I look at their current share prices and I figure out a margin of safety, which is typically around 30-40% below the current share price, right? And I tell my broker that if it punches through that lower bound that I have in mind, I tell him that you don't even have to call me, just buy them if it punches through the lower bound. So that's that lower bound started getting clipped through when the Nifty was at 10,200, right? Yeah. Once again, share prices have risen a bit, but those numbers to my mind, my buying prices, I don't drive them so much of what's happening in the market. My buying prices are distinct from what's happening in the market, and hence 9,500. At 9,500, I know on a whole bunch of stocks, I will get the prices I want. So my brokers already have the instructions that if those prices come, please load up, don't even bother calling me, because you also want to take emotion out of this whole process. On the day the Nifty hits 9,500, maybe I'll be so terrified I won't be able to put the buy order on. So I get the emotion out of the way by telling him, buy on that day without bothering to call me.
I'm glad you asked this question because this is serious investment advice. Saurabh, thanks so much for giving us that. And to you and your team, a new team at that, a very happy Dhanteras and a great new year.
Now, happy Diwali to you and your viewers as well. Thanks, Neeraj.
Thanks, Saurabh. Pleasure having you.